Okay, so I'm presenting a sample problem for trust here. Okay, so this is a sample problem. So a trust classified as other trust was established for beneficiaries Clark and Steve, both are resident taxpayers. The distribution of the income will be 80% for Clark and 20% for Steve. During the taxable year, the distribution income was 200,000 kina. Okay, so we're required to calculate for income tax payable of the trust and both beneficiaries. Now, because this is classified as other trust, the percentage of the rate will be 28% as per IRC's website. Okay. So in this case, you can see that net income 200,000 kina multiplied by 28%. Okay. So we have 56,000 kina. Then the distribution of income, we have 200,000 kina multiplied by 80% for Clark and then 20% for Steve. So clear on this straightforward calculation. Okay. By the way, I'm recording this so that later you can watch. Okay. Now, because these are individuals, so we need to use income tax table. Okay. So resident taxpayer will use the income tax table for individual taxpayer. Okay. All right. Okay, so we have this bracket, and I'll go and show you the next one. So for 160, that will be included in the 40% bracket. Okay, so 160 multiplied by 40% less 11,500. Sorry, 11,150. Okay, so the tax here will be 52,850 for Clark, and Steve will be under the 35% bracket. So we have 6,350. Okay. Then, because trust already paid 28%, remember the other trust? So they pay 20%. So that portion can be claimed as tax credit. Okay. So in order for us to show it, it will be like this. So for Clark, which has gross tax or income tax due of 52,850, will get 80% of the tax paid of the trust. Okay, because that is the share of Clark, right? 80%. So here, 56,000 multiplied by 80%. Okay, so we have 44,800. So that will be the tax credit. So 52,850 less 44,800. So you have for Clark, he still needs to pay 8,050. Okay. Of course, we never mentioned about rebates here, so I don't want to complicate. But you know, you got the point. Okay, if there's a rebate, you need to deduct the rebate. For Steve, gross income tax due based on the calculation previously shown, 6,350 less tax credit. So we have 56,000 kina paid by the trust for the tax. Then 20% of that will be 11,200. Here, Steve will have net tax refundable of 4,850 because the tax credit is higher than the gross tax due by of Steve of this situation. Right here. Right. Now, if it is classified as unit trust, we know, okay, that the tax rate will be 30%. Okay, same with property trust. But if because this is unit trust and also in the other side is property trust, beneficiaries will be exempted, okay, of paying income tax due. Okay, so that might be a bit of a trick, especially in your exam. Okay, so just be mindful of that. So unit trust, property trust, beneficiaries exempted, but the tax rate is 30% for the trust. Okay, clear? That is based on IRC's issuance. All right, so that's the end of that presentation.